Ladies and gentlemen, good day and welcome to the Waaree Renewable Technologies Limited conference call, hosted by MUFG In Time India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. I now hand the conference over to Mr. Prathamesh Parab from MUFG In Time India Limited. Thank you, and over to you, Mr. Prathamesh. Sir, we are unable to hear you.
Thank you, Ikra. Good afternoon, ladies and gentlemen. I welcome you all to the Q2 and H1 FY26 earnings conference call of Waaree Renewable Technologies Limited. Today on the call we have from management Mr. Manmohan Sharma, Chief Financial Officer, Mr. Abhishek Parikh, Group Head Finance, Mr. Neeraj Vinayak, Vice President Investor Relations, and Mr. Rohit Bade, General Manager Investor Relations. Before we proceed with this call, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties. For more details, kindly refer to the investor presentation and other filings that can be found on the company's website. Without further ado, I would like to hand over the call to Mr. Manmohan Sharma for his opening remarks, and then we open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Prathamesh. Good afternoon, everyone. I would like to extend a warm welcome to all participants for joining the earnings conference call of Waaree Renewable Technologies Limited for discussing our business performance for Q2 and H1 FY 2026. I hope you all had an opportunity to review our financial results and investor presentation, which has been made available on stock exchange and are uploaded on company's website. I would like to commence by showing my sincere gratitude to all our stakeholders for their unwavering trust and support. Your continued confidence in our vision and execution has played an important role in shaping our journey so far. Today on the call, I have along with me the key members of our management team. Starting with our financial results, we are pleased to report the highest ever quarterly revenue and PAT in Q2 FY 2026. Our revenue from operations stood at rupees 774.78 crores, a growth of 47.73% over the same period of last year. EBITDA comes in at rupees 157.94 crores, up 120.69% year-on-year. EBITDA margin for the quarter stood at 20.39% versus 13.65% for the same period last year. PAT reached to rupees 116.34 crores, marking a 117.40% increase against Q2 FY 2025. For the first half of FY 2026, we recorded total revenue from operation of rupees 1377.97 crores, up 81.12% compared to H1 FY 2025. EBITDA for first 6 months stood at rupees 275.48 crores, reflecting a growth of 144.56% year-on-year basis. And the PAT comes in at rupees 202.73 crores, up 148.21% year-on-year basis. These results underscore our consistent performance and strong operating leverage for the current financial year. Our unexecuted order book remains healthy at 3.48 gigawatt peak, giving us solid visibility for the upcoming quarters. During H1, we executed 1621 megawatt peak of EPC projects, which even exceeds our full year execution of FY 2025, reinforcing our execution capability and enabling us to sustain our leadership in India's EPC space. Let me now turn to the broader industry development that are shaping our operating environment. India's renewable energy momentum continues to accelerate, with non-fossil fuel capacity now exceeding 250 gigawatts, a significant milestone that puts the country more than halfway target its 2030 target of 500 gigawatts. As of September 2025, India's cumulative solar capacity stands at 127.33 gigawatts, with ground-mounted projects contributing 97.15 gigawatts, rooftop solar at 21.52 gigawatts, hybrid installation at 3.26 gigawatts, and off-grid system at 5.40 gigawatts. Importantly, rooftop and open access system now accounts for over 20% of installed capacity, driven by flagship programs like PM Surya Ghar Muft Bijli Yojana and PM Kusum Yojana, which target for 34.8 gigawatt by March 2026. Looking at the policy update, the recent GST reduction on solar modules from 12% to 5% is expected to result in decreased capital expenditure, making it a good investment opportunity, further reinforcing solar energy as the lowest cost of energy. Policy tailwinds and reduction in GST on solar module, coupled with ambitious national target of 500 gigawatt by 2030, are expected to boost a strong pipeline of utility scale and C&I customers. This will further driven the EPC demand. With growing solar installed base and projects executed by us, O&M segment is emerging as a major growth opportunity for the company. With increased requirement of storage and growing popularity of hybrid projects, the demand of efficient, reliable, and technology-driven O&M services will further increase. At Waaree Renewable Technology, we continue to leverage our integrated expertise and execution strength to stay ahead in a dynamic market. With a strong order book, expanding footprint, and supportive policy environment, we are well positioned to drive growth across emerging segments. As we look ahead, we believe that the competitive advantage will depend majorly on three critical pillars: operational efficiency, superior quality, and the ability to deliver integrated and end-to-end facilities. In this evolving landscape, we find ourselves not just compatible, but also positioned in the market to take all kinds of opportunity in the EPC segment. We are excited about the opportunity ahead, and we remain committed to driving the sustainable growth in the renewable energy landscape and creating long-term value for our stakeholders. Thank you for your continued support. We may now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aritra Banerjee from Nomura. Please go ahead.
Yeah, I hope I'm audible.
Yes, you are audible.
Yeah, so congratulations on a fantastic quarter, sir. So my first question is regarding your margin outlook. So, we have seen a very strong uptick in margins, and our margins are very healthy currently. So going forward, do you see these levels of margin sustainable, or what would you term as a stable rate of margins going forward?
So we have already addressed this margin point in various communications. So the margin where we are comfortable is around 15%. But with the operational efficiency, tight budgeting control, monitoring all projects on real-time basis, we are able to get this kind of margins. So with the available order book, whatever we have, we expect that margin will remain in the range of more than 15%.
Right. So, this you're talking about FY26, like more than 15% margin?
Yeah, for the entire financial year. Whatever we have done so far, plus for the balance year, we are expect that it should be around 15%.
Got it, sir. Now, so my second question is regarding, the A11 list two. So, as you would know, like, there has been a bit of an extension provided to the developers with the implementation of A11 list two. So do you foresee any, delay or booking of orders basis that? Because I heard there were some delays in, PPA signing going on since the extension has been provided. So do you see any headwind coming from that extension?
So as far as we as a company, we are concerned for the H1 itself, we have booked order worth of 1.8 gigawatt. So we started last quarter with 3.15 gigawatt peak. After execution of around 900 megawatt peak, we are our order position is 3.48 gigawatt as of now. So looking at the entire market of the solar with the government ambitious plan to have it by 500 by 2030, definitely we are in a good shape and in the right space. So the more and more likely to flow in this.
Also to add up here, Aritra, to your question, if you look at A11-2, the list which has recently come out and government reaffirmed the timelines, with some window being allowed to the developer community from December last year to September this year. But in our case, since most of the contracts are signed off and majority of cases PPAs are already in place, so we are not affected due to the change in or given the fact this window has come up. We are not much affected with this change.
Got it, sir. And so my final question would be, regarding the order book position. So could you give a color regarding, split of order book on a domestic and an overseas basis? And the reason I'm asking this question is because, regarding the geopolitical tensions and the trade uncertainties going at the overseas level. So do you see any kind of headwinds arising for our business going forward?
So as of now, we are the domestic EPC. All the orders which are executing as of now, 3.48 gigawatt, which are there in our hand, is all domestic orders. Of course, we are looking any kind of opportunity which may come up in the future for the international space also. We are actively looking. But as of now, to answer your question, we are, as of now, whatever orders are there, we are of domestic.
Sure, sir. Understood. Thanks for answering the questions. If I have further questions, I'll join back with you. Thank you, and all the best for the coming quarters.
Thank you. The next question is from the line of Anupam Goswami from SUD Life. Please go ahead.
Hi, good afternoon, sir. So my first question on if you can give us a slight margin idea on rooftop as well as our domestic EPC, and now that you are mentioning about 15% margins, going a little forward, let's say FY27, given the scenario, what sort of margin can we command? We see years margin at a quite lower level. Are we, if we increase or scale up, are we going to reduce our margins or due to the competition also?
No, as of now, the first question of yours, like we have all majority of the revenue is coming from the ground mounted, because the ground mounted this project have large capacity. They can be scaled up to 1 gigawatt or 2 gigawatt kind of a project. So that is one part. Secondly, the maximum margin is coming from this operational efficiency. So as we scale up our operation, there is a lot of things which comes as a driver for our growth and improving our margin. So whatever the base margin, figure 15% which we are quoting, but the improvement is always there. So with the scale, timely execution with the budget tightly control, etc., these all factor comes in. Therefore, you are seeing the margin of 20% in this quarter, EBITDA margin.
But sir, you mentioned 15%. So are we going to have a lower margin in the second half and due to more of EPC work?
No, no, it is nothing like that. Whatever, we are not giving that over a period of time, it will get reduced, etc. But the order book which is there in our hand, all kind of like fixed price contracts. So, and that while we are executing the orders, we have already seen and prepared the budget for all kind of projects. So, as of now, we are not giving full year guidance that it should be in the same range like that, but we are comfortable with the 15% margin what we are stating.
Okay. So the current order book also has a sort of 15% sort of margin. Should we take that?
Yeah, overall we can see that.
So, Anupam, the difference here is when we take up a project or whenever we sign up for a contract with a customer, we start with a mandate of at least 15% margins internally, right? That's what we started, and we are very confident of these numbers. But during the execution of project, there's a timeline, and since we have got one of the largest team, both on design as well as procurement side, well poised to further, support on the margin process, and that generally happens in the execution of the project, which we call as execution. I would say capabilities of our project teams, and that's how you see a margin ranging 16 to 19 to 19-20%. So bare minimum that we look at is around 15% when we started the project, but our endeavor is always to take it up to a ranges of 19-20%.
Okay. And sir, if our order book breakup, if you can give on the rooftop, domestic EPC or C&I, some sort of light if you can give.
Yeah, mostly all order are domestic, number one, and all majority of them are ground mounted projects.
Are these more into our group connections that we get, where we supply modules ourselves? Are we getting business from there mostly?
No, it is not that way, but definitely the overall group has the capability in the production line, etc. But we are getting from the other customers also, where whatever the modules are there, we are installing them as well.
Okay. Thank you so much. I'll get back in.
Thank you. The next question is from the line of Rehan Syed from Trinitra Asset Managers. Please go ahead.
Yeah. Good evening to your team, and thank you for giving me the opportunity. Am I audible, right?
Yeah, please.
Yeah. So, sir, I want just more clarification on how are the newly approved IPV projects in Maharashtra and Rajasthan expected to impact top line profitability from quarter 3 onwards in FY26? Could you please just put some light on that? This is my first question.
Yeah. So we have three revenue streams. That is one EPC, another one is O&M, and third one is IPP. So as of now, also we have revenue from all the three streams. Compared to my EPC, it is less, but this revenue giving it is IPP is giving revenue for another 20 to 25 years. So in the line with our existing project of 54 megawatt, which we are as of now, we wanted to have some more IPP projects. So therefore, during this board meeting, the board has approved additional of 14 into 2 in Maharashtra plus 37 megawatt peak in Rajasthan. So this is in line with our existing. We wanted to add some more assets into it.
Okay. Okay. So my second question is around the revenue mix diversification that you right now you have EPC and IPP covering towards 70-30 mix. So what you are targeting for next 2 to 3 years? Like what will be the mix for these two segments, EPC and IPP?
Can you repeat? Actually, your voice was not clear.
So, sir, I'm asking what's the medium-term roadmap for revenue diversification? Do you see EPC and IPP converging towards a 70-30 mix over the next 2 to 3 years?
So primarily the core business of Waaree Renewable Technologies is the EPC stream, and this remains and continues to be. However, we are also trying to enhance our ground force on the O&M business, and which you certainly see even in the numbers also that year-on-year, our O&M portfolio is increasing. Same point in time, we also some few assets on the IPP front, but largely these assets are smaller and within the C&I range only. So you may continue to see few projects, but the main business of Waaree Renewable Technologies goes into EPC and O&M.
So, and to add further, like whatever the projects which we are executing, we try to get O&M of this. So in this quarter, we have completed one of the project of 412 megawatts. So that is likely to it will add to our O&M kitty going forward. So that is what we are doing.
Okay. Okay, sir. Thank you. And one of my last question is that I want just more clarification on lastly any update on collaboration with Waaree Energies for module sourcing. So, sir, are you lacking in fixed supply pricing or following spotting procurement with this?
So, as you're aware that, Waaree Energies is one of the largest module suppliers. So definitely when we procure solar panels for our projects also, we do take quotations even from Waaree Energies. But end of the day, being a company, our own, policy is always to work on the arm's length basis and have minimum comparable quotations whenever we procure. So there is a strategic advantage, but then the procurement is always sacrosanct.
But if this procurement of module etc. comes when we are getting turnkey kind of order, but the majority of the orders which we are carrying as of now is like pure EPC. So relatively, my strength is like execution EPC, whether it's module supplied by Waaree or maybe some other supplier, but our strength is do the EPC work. So whenever there is opportunity of turnkey order, which are relatively small in my entire EPC, we are executing the EPC orders.
Yeah. Okay. Okay. Thank you, sir. Thank you for clarification, and I'll join in the queue.
Thank you. The next question is from the line of Sagar from Alchemy Capital. Please go ahead.
Thank you, sir, for your insights and your opening remarks. You mentioned 3.48 gigawatt as the order book. Can you quantify in rupee terms how much is it?
So we are not exactly, but giving any kind of rupee term what is to my order book, but definitely to give you sense that we are executing various orders. So some of them are not pure EPC orders where our scope is limited to certain extent. So that, and where some of the orders are mixed where we need to supply the module as well. So it is ranging between maybe 1 crore to 3 crores, depend upon the scope of the work which is awarded to me. And definitely depend upon the exact work it is given to me.
Or can you give a split, sir? What percentage would be pure EPC and what percentage would be turnkey?
So just to give you sense, it ranges between, let us say 1.8 or maybe 1 crore per megawatt to 1.25, 1.3, like that.
And sir, what is the order pipeline going forward? What quantum of orders do you foresee in the rest of the financial year in terms of bids, etc. coming up?
See, if you see that overall government tenders are on a continuous basis 6 to 7 gigawatt plus the private players, C&I and the IPP customers is also around 20 gigawatt. So total pipeline which we follow is around 27 gigawatt. And as I mentioned in my previous question that we only won order worth of 1.8 gigawatt during this H1. So we continue that the order flow will continue over a period of next few years, in fact, because we wanted to set up this country wanted to set up this solar, green energy. So if you see that from the last 6 months itself, the country had added 21 gigawatt, and remaining 6 months is still there. So every year 40 to 50 gigawatt is to be added in terms of renewable energy. Solar is going to play a major role, and as a APC player, we have a big opportunity to take any revenue out of it.
Got it. Thank you so much and all the best, sir.
Thank you. The next question is from the line of Ishita Lodha from Swan Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. My question is with respect to slide number 28 of the presentation. So in cash flow statement, we have seen a good growth in our execution, but at the same time, when I'm looking at cash flow from operating activities, it has remained flat at 84 crores. So why is this, and how do you see this improving over the next half of the financial year?
Definitely with the more and more orders which are going to execute in the next H2, this position is going to improve going forward.
Hmm. And what is the status of the execution of the Jindal order?
Specifically, we cannot talk about any specific order in this conference call. But to tell you, whatever order we have taken, we are executing and in a timely manner. So this, along with that, this is one of the order which we are executing as of now.
Okay. So our quarterly execution run rate would be in upward trajectory going forward?
Yeah, definitely. If I give you a sense, actually, for the last financial year, we have done around 1.5 gigawatt worth of order we have executed. So in the H1 itself, we have done 1.6. So the way my revenue has gone up from last March 25, we were 1597. Now we are 1377. So you can just see the way we are executing the order, and with the available my order book, you can see this growth.
Okay. And in your press release that had come in last 3 months, in one of the orders, you also got orders for the transmission and substation 400 kV. So I just wanted to ask, what is our qualification in transmission substation EPC? Can we execute projects of 765 kV? And are we also looking for standalone transmission substation orders or only with combination with solar? And in this case, how do we source the bought out components, which is the towers, conductors, etc.?
So as a part of creation of overall solar generating facility, we are even now also we are doing connecting this power, whatever generated from the solar generating unit, is to the nearest substation or maybe to the grid. So as a part of this process, we have expertise of doing so as of now also. We are looking more and more order if we can get this kind of a building of a transmission line or substations. So this is one of the order which we have received for doing this work also. And as we are doing the EPC work and connecting to any substation of the grid, our capability is there to execute these kind of orders in going forward.
Okay. And is it possible to share what percentage of your order book is from third-party clients?
Majorities of is from third-party clients.
Okay. Thank you. That's it from my side, and all the best.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. The next question is from the line of Raman KV from Sequent Investment. Please go ahead.
Hello, sir. Can you hear me?
Yes, please.
Sir, I have a few questions. One is with respect to the realization per megawatt. So you said it's anywhere between 1 to 1.2 crores per megawatt, if I'm not wrong. But if I'm tracking the data with respect to the presentation given, we executed around 1.6 gigawatt of order book during the H1, and we clocked 1380 crores of revenue. So that brings the realization down to 85 lakhs per megawatt. So can you just give us the broader picture? Is there any decrease in the realization per megawatt, or is the bills respected with respect to the entire project is yet to be received by the company?
So as I replied in my earlier questions that the order which I am getting is purely, some of them are purely EPC order, some of them are limited to some restricted to the scope, and some of the order which I am executing on a turnkey basis where module is also under my scope. So it is difficult to calculate the way you are doing it because in one particular quarter or maybe one period of time, it is the various orders are going on. So it's a mixture because this revenue is coming from all the type of orders, and the way you are just seeing this, it may be difficult to calculate.
So you're basically saying it's because of part EPC, part turnkey projects.
Yes.
The in the EPC project, we do not supply the modules, right?
Yes, because the supply is in the scope of the customer or developer who wanted to have this power project. So they will supply me the module. My job is to execute the EPC order.
And sir, I just want to understand when it comes to the margin. So because we are not supplying the modules, so EPC business tend to have lower margins when compared to turnkey projects, right?
No, it is nothing like that. This with module or without module margin. What we are doing is like we have some base calculation at what risk and reward we are getting to have our business. So we are not going any kind of like below to the threshold limit. Then to have the order in our kitty. So accordingly, after analyzing the every order which suits our risk reward metric, then only we go ahead with the booking the order.
And sir, my second question is with respect to the order itself. So while researching about this the entire industry, I heard that usually orders in eastern states are a better margin business when compared to rest of India. Is that true?
No, we have not seen any kind of such differentiation because we are executing projects in various states, Rajasthan, Gujarat, MP, Andhra, and Maharashtra, and all various states we are doing execution order. But the differentiation which you are mentioning, we are not seen. We have not noticed.
Okay. So, and my final question is with respect to the IPP side. So my understanding is currently you have three revenue streams. One is the EPC, then IPP, and then O&M. And IPP is, I think, you record it under your other operating income. So we have approved the three projects. Two of them are 14 megawatt, and one of them is 38 megawatt. So what is the capex outline for these, and how much incremental revenue can we expect from these three combined projects?
So just to correct one thing, that we are recording IPO revenue under revenue from operations only. The revenue from operations includes by EPC, then the O&M income, and then IPP income. So these are the three revenue streams are recorded in the. And what we are showing is other income is like definitely on the bank FDs and whatever money, spare money we do have, we invest in and get those returns.
Okay, sir. Hello.
Thank you. The next question is from the line of Vivek Gupta from Star Investment. Please go ahead.
Yeah, hi. Am I audible?
Yes, you are audible.
Yeah, hello, sir. So my first question is, like, speaking about the battery energy storage system, like, what's the capex looking like for that particular segment? And also, more importantly, can you break down the anticipated revenue versus cost per megawatt hours for us?
So, as of now, with respect to our total order book, we have 40 megawatt hours of base order. So, we are not doing capex, at least in this company, for the batteries. And so, whatever the orders which wanted to have from in this EPC company is the execution of EPC of which are execution of the project which are supported by BESS.
Okay. So can you just I just want to know your view on the industry outlook for BESS right now, and what kind of bidding pipeline are you seeing in terms of order size?
So every going forward, this may be the best should be the one of the area where we have an opportunity to do the EPC business because whatever solar power you are generating during the daytime, if you wanted to have it in the night time or maybe next hours, you need to have storage system. So along with the existing solar, we see very good opportunity that the country will have the best as a storage system. So we have opportunity as a company, we have opportunity to have doing the EPC business of this base.
Okay. Like, have you put in any bids for a BESS projects yet? If so, like, can you give us a ballpark on the size and your internal view on the success rate?
So there are a lot of tenders or lot of inquiries are sorting along with the base. So we are actively participating in all kind of possible bids. And once something comes concrete, definitely we'll announce through exchanges to all our stakeholders.
Okay. Thank you.
Thank you. The next question is from the line of Sarang Joglekar from Vimana Capital. Please go ahead.
Hello?
Sarang, please go ahead with your question. Your line is unmuted.
Yeah. Yeah. Hi. So, now that ALMM List 2 is kicking in from next year, do you think there will be challenge procuring modules and will it delay the projects from there on? Also, do you expect that implementation to be further delayed?
No, as far as we as a EPC companies are concerned, so most of our orders are pure EPC, where the module is in scope of the developer or the project owner. So in our case, when the all kind of ground clearances, because this requires a lot of money to put in by the investor or the developer. So once all kind of a clearance are there in place, then only they will give us the order for EPC. And once the EPC order is given, we are there to execute actually. So all these delay, whatever you are mentioning or thinking, maybe it's the scope of the owner before awarding EPC order to us.
Right. But if there is a challenge procuring that, they will eventually delay the EPC work as well, right? That's why I'm asking.
No, what we are thinking differently actually. Once you have all the land connectivity, etc., and you have lined up from where you are going to likely to have modules, then only mostly the people think of awarding EPC contract. So we whatever once the contract is awarded and the timeline scope is defined, we will execute actually.
Understood. And currently, do you have any contracts which have that mandate of ALMM List 2 compliance?
So that is, as I mentioned, that is in scope of the developer or owner. So once the contract is awarded to me, it is there. They need to see whatever they wanted to see with respect to ALMM. Once his contract is awarded to me, I will do in a speedy way to complete this project.
Understood. And on the other question, like, do you expect it to be delayed further or the implementation?
That is, as a EPC company, it is not difficult to comment on this particular whatever the happening development is doing. But what I wanted to convey actually, because more and more solar project is coming up with that in a big way, wanted to achieve 500 gigawatt by 2030. I think all these are the hurdles will be sorted out very soon.
Okay, understood. That's it from my side. Thank you.
Thank you. The next question is from the line of Anand B from Seema Wealth Private Limited. Please go ahead.
Yeah, good evening.
Yes.
Yeah, just regarding your BESS orders, like, do you see, if you can estimate, like, how many orders can we look forward to in the next couple of years or this year in particular?
So it is difficult to estimate that how much order can inflow from the base project. But certainly for the grid stability, one should be installing this base also, because for the grid requirement also the base is very much necessary.
Okay. Okay. But do you see, okay, at least in this angle, can you see like the best orders, the revenue that you receive from best orders that share of revenue can increase as the years go on?
Uh, it is difficult to predict anything that how much this EPC along with BESS will come going forward. But what my view is that this is to be supported. This grid is to be supported by the BESS. So sooner or later it will come.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Raman KV from Sequent Investment. Please go ahead.
Thank you for the follow-up. I just have two questions. One, do we have any revenue from the parent company, like the listed entity, Waaree Energies?
Yes, we are executing some of the projects which are is there from Waaree. But if you see the overall execution during this whatever we H2 is not that very significant portion actually.
So, on a rough ballpark figure, how much will be the revenue from the parent company?
We have not analyzed actually for this call, but definitely we are executing one of the project which is been awarded by the company, and there is further order which we have received in this H2 is one of the order which recently we have announced in the exchange.
And so we have a current order of order book of 3.48 gigawatts, which is unexecuted. What's the timeline of these or for this order to be executed?
So these 3.48 gigawatt order book which is there as of now is likely to be executed over next 12 to 15 months.
Okay. Thank you, sir.
Thank you. The next question is from the line of Surinder Singh, an individual investor. Please go ahead.
So congratulations on the strong set of numbers. This is in context of current demand environment, and my question is, are you facing any pricing pressure while picking up new orders?
Oh, this competition is always be there, but definitely for this we are seeing a lot of order inflow. So while demand is definitely there, as far as competition concerned, competition good always for the industry. So, but whenever we are, just to tell you, whenever we are taking any kind of order, we are just looking at the budgetary, whatever budgets, etc., and what is the profit or margin is there. So after evaluating everything, if this order suits us our risk reward metric, then only we do. Otherwise, we don't execute the order.
Okay, thanks. Which means you are choosing the orders. You are not taking any of the orders. My next question is that your order book of 3.48 gigawatt, does it have some very, very large orders which would make us dependent on very few large customers?
This order books, like it's a continuous process actually. The 3.4, when I closed my last quarter, it was 3.1. So it's a continuous process. We have announced earlier 2 gigawatt order at single location. Earlier we announced 1 gigawatt order at single location. So definitely we have ability to execute from 100 megawatt to maybe 2 gigawatt size of order. So it's a continuous process actually. Whatever order we are executing, we are rebooking also.
Okay, thank you. That's all.
Thank you. The next question is from the line of Amit Singh from VVID. Please go ahead.
Hello, am I audible?
Yes, sir, you are
Yes.
audible.
Yeah. So first of all, congratulations to the team for such great numbers. My few questions is related to the cooling business. Recently, you acquired a new company, and another is related to the data center. So I would like to know that what is the way ahead, how much revenue you see, and the margins related to data center and the cooling business, and also about what value this cooling business will bring to Waaree Renewable Technologies. As of now, you have the three verticals and how this fits in.
Okay.
Thanks.
So to answer your first question, this cooling business, the company which we have identified and acquired around 3% stake. So this company provides the cooling as a solution. So like for the large offices and factories, they are providing the cooling actually. So we find synergy in our business because as a company we have opportunity to do the solar installation wherever they are approaching for the cooling. We as a company can also have an opportunity to do EPC business, this module installation also. That is one. And with respect to data center, which you have mentioned that we are actively looking data center. We have last about 6 months back we have added amended our clause, and we are actively looking any kind of opportunity which is coming in the form of EPC for the data center.
So as of now, you don't have any business, or you're not bidding anything, or you are just looking to bid. How is it getting converted?
Yeah, there is no formal bidding happening as of now for the data center. It's a bilateral discussion. So we have hired senior level personnel for all to take care or to see the possibility of having data center as EPC in our business. So as we progress, let us see, and we'll update you going forward as well.
Okay. And my last question would be that with respect to your bidding pipeline, what is the conversion that you are seeing right now? What is your conversion rate? Because you are bidding for 27 gigawatt. So what would be because in 16 months, the kind of execution that your company is doing is awesome. So going forward, how do we see that how much orders are going to come?
So as you rightly said, we are actively looking of chasing this 27 gigawatt worth of order, but it is difficult to give you any kind of a number that how much will be the conversion rate. But if you see that from last quarter or maybe few quarters that we are keep on executing as much as possible. We have done 1.6 gigawatt for H1 as compared to 1.5 gigawatt of last year. And in the order flows also, we have seen that we have received 1.8 gigawatt order. So we are chasing this entire order book. We try to get maximum out of it.
So okay. So thank you. Thank you.
Thank you. The next question is from the line of Kumar Divyanshu, an individual investor. Please go ahead.
Hello.
Yes, please.
Okay, thank you, sir. Congratulations for the very good number. Just I am having one question. That could you please tell me what is the current order book, means overall, till second quarter of FY26?
Yeah. So as I mentioned earlier conversation, we have 3.48 gigawatt peak of worth of order book, which is to be executed over next 12 to 15 months.
Okay, thank you. And what about the data center? Could you please comment on that, if there is any order or bid in the pipeline or not, or whether you are going to communicate to any of the companies or firm, whatever it is?
So as of now, we have nothing in our order pipeline, which I mentioned to you with respect to data center. But as I mentioned that we are actively looking any kind of opportunity as a EPC player coming up in the data center. So once something materialized, definitely we'll communicate through exchange to you, sir.
Okay, sir. And the third question and the last question is there any foreign investment coming to your company likewise, or DI is actively interested to invest in your company, or whether the promoter is going to increase the stake?
There is nothing like whatever you are mentioning. We are very asset-light company actually. We don't have any kind of major term loan, etc. We have 20 crore of term loan, which is for the IPP business. So as of now, there is no such plan, whatever you have mentioned. But definitely, if something comes up, we'll definitely communicate through exchange.
Okay, thank you. Thank you so much.
Thank you. The next question is from the line of Anushka Vora from Vemana Capital. Please go ahead.
Hello.
Yes.
Yes. Hi. Thank you for the opportunity. My question is regarding, so last year there were certain evacuation and connectivity issues with respect to solar projects. So this year, have these problems kind of continued, or has it become better? And is that affecting execution for companies?
See, this whenever you are undertaking any kind of project, some initial or problem may be hurdles may be there. But with respect to our company, whatever orders we have got as of now, we are our job is to do the EPC work, and we don't find anything related to that. Even if it is there, then also it is in the scope of the customer.
Okay. And what is the capex that you have planned for the IPP project?
So, in the recent board meeting, the board has approved 14 megawatt peak, 2 projects in Maharashtra and 1 project in Rajasthan. So that is going to be executed over S2 or maybe little later than that.
Okay. Thank you so much, sir. All the best.
Thank you.
Thank you. The next question is from the line of Vaibhav Lohia from CFM. Please go ahead.
Thanks for the opportunity. So I want to understand what is the sector outlook for solar EPC market after FY27, because as of now, we are seeing around 40-50 gigawatt of additions every year. But if we do the math for the next 5 years, it will be around 250 gigawatts. But the whole renewable energy target for 2030 is 500 gigawatts. So do you see any softness after FY27?
I don't think so. I'll think the other way around actually, because there is a lot of opportunity beyond 500 gigawatt also in the country. Lot many sites, lot many locations are available for the installation of solar projects. So therefore, you are seeing these kind of numbers. We have already in H1 itself we have crossed 21 gigawatt peak in this financial year. So with this pace, I think we'll go beyond whatever target is given and may reach little early than what we thought.
Okay, so I can assume the growth will be better going forward and it won't decline after FY27, right?
Yes, definitely, because there is a lot of potential in the country to have solar projects.
Okay, understood. And so last question from my end, what is the total addressable market for the data center business for Waaree Group?
We are exploring all kind of possibility with respect to the data center, as I mentioned earlier. But let us see if something coming up, we'll definitely communicate to you, sir.
So can you give some rough numbers for the just quantify the numbers for the total addressable market? It will be like very helpful for us to understand that.
No, if you see that lot many people are using AI and this product, so it's likely to consume more and more data. And for the data center, there is a lot of opportunity will be there.
Yeah. So to add up to this, like right now we are in the trajectory of around 250 to 300 megawatt worth of data centers that we have in the country. And if you sum up all the ongoing projects for which bid is happening, we expect over the next 4-5 years at least a gigawatt worth of more data centers to come up in the markets. So certainly a very large market than what we see today.
Okay, understood. Thank you.
Thank you. That was the last question for today. On behalf of Waaree Renewable Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.